invested on that specific portion of FPT, including the Florida assets. And we are very excited with the opportunity to continue to sell the remaining portions of FPT as we go. The other asset, Lawson, that we're considering selling would be our direct reduction plant in Toledo, Ohio, because as you might conclude on your own, but I will reiterate here, we have no interest in building a flat rolled mini mill ourselves. I was keeping that HBI plant to supply Big River in case we had the opportunity to acquire U.S. Steel, which did not play out. So as we did not acquire Big River through the acquisition of U.S. Steel, I don't see any specific strategic value of keeping a direct reduction plant producing HBI with the strict goal of supplying flat rolled mini mill producing more of a high-end type of flat rolled products. That's not my problem anymore. So we still have a lot of interest in that specific plant, but this discussion with the MOU and the subsequent work that we're doing with our partner is showing that we might be doing other things with that plant, which I will not elaborate at this point. So I'm kind of still considering alternatives, but I'm deprioritizing that because the MOU trumps, no pun intended, trumps the opportunity of selling itself as a standalone unit, the Toledo plant.
Okay, understood. That's very clear. If I could just follow up on your comment on FTP. So should we be looking for some sort of announcement on that sale of a portion or partnership?
I just made it. We are under agreement to sell the Florida assets to SA Recycling. So, and that's the deal. So it's out. I just said it to you.
Can you provide any detail on economics at this point, or is it too early?
No.
Okay.
But it's good.
Thank you for that.
It's good. And if you apply a multiple to a site that generates zero EBITDA, you can pick one.
Okay.
So it doesn't change the economics of the rest. That's the importance of this sale. That's why I'm disclosing. That was an asset that for me was always completely relevant because I'm not going to put a mini mill in Florida to produce rebar or anything else. So that was not a site that was interested from the get-go. It came as an addendum to what I was really interested in having, the real FPT, the FPT around Detroit and around prime scrap, and that's completely preserved. And there are other companies, more than one actually, interested in acquiring the rest. And they both have the same thing in common. They don't want Florida. So we moved Florida. But we're not going to reveal the number, but the number is extremely good, and you'll see in our liquidity going forward. But you got to wait because this is just a signed agreement. It's not closing yet, so we can't disclose the number.
Yeah, understood. All right. Thanks very much for your responses. I appreciate it.
Thanks, Lawson.
Thank you. The next question is coming from Phil Gibbs of KeyBanc Capital Markets. Please go ahead.
Hey, good morning.
Morning, Phil.
Question is on the auto contracts. Did any of the new contracts kick in during this quarter, or do any of the new contracts kick in during the fourth quarter?
Yeah, we have some kicking in October 1st. I'm simplifying when I'm saying 2026 because, it's a short quarter. Fourth quarter, particularly in automotive, is not a quarter that we are excited about because we're going to have shutdowns through the end of the year. That's normal course. Sometimes we have, I'm not sure about this year because they're really busy, but it's normal course for them to shut down around Thanksgiving as well. But we're going to see a lot of activity coming from these contracts as the year turns to 2026. So we're super excited with everything that's happening with General Motors, Ford, Stellantis, with this big announcement of $13 billion bringing back the plants that we were by far the largest suppliers. So all these things are coming to us at this point. We have Ford, we have Hyundai, you have Honda, we have Toyota in North America. These are all happening. And the good thing, Phil, is that the car manufacturers finally realize that it's not a good thing to wait and seeing that the Trump administration is not changing their tune. I think Secretary Lutnick was very clear when he said the United States will be first in producing automobiles. Canada can be second. So that shows resolve. So I like to see that, and that helps us in terms of getting our business moving in the right direction. So we are good.
And then just a follow-up on the cost side, what does the guidance imply for further unit cost reductions in the fourth quarter, and should we expect any more momentum in the first part of 26? Thank you.
I'll let Celso handle this one, Phil. Please, Celso.
Yeah, sure. Hey, Phil. If you look at the cost performance in Q3, adjusted for the increased automotive mix, we still expect costs to be down $50 a ton year over year when adjusted for this mix. You can see in our track record achieving cost reductions dating back, to 2023. We achieved an $80 a ton cost reduction in 23. We were down another $30 a ton in 24. And then now in 25, our unit costs are still expected to be down $50 a ton. So we're not changing the guide there. Just as it relates to other Q4 kind of talking points and general guidance that I can give you, shipments should be similar as Q3, around 4 million tons. You have to consider seasonality with the holidays, offsetting improved demand. Auto shipments are expected to be similar. And then in terms of pricing, you probably have all the pieces that you need to calculate as the ASP for Q4. So relative to Q3, Q4 cost should be relatively similar to Q3.
Thank you.
Thanks, Phil.
Thank you. Our next question is coming from Carlos de Alba of Morgan Stanley. Please go ahead.
Yeah, good morning, Lorenzo and Celso. Thanks for the update. Just on following up on the auto contract, can you maybe give us some comment on the volume growth implicit in this new agreement, and potentially an indication of how much pricing may be moving up or down or staying flat? Definitely a very important piece of the business going forward.
Look, we directionally, these contracts will generate a lot more margin for us, including margin per ton. And that's all I can share at this point with you. These are good contracts. But we realized one thing, Carlos, that probably has been missed throughout this entire conversation. And I'm trying to, in my prepared remarks, and now using your question, so thanks for the question. I will try to explain a little bit about what Cleveland-Cliffs really is in terms of the automotive industry. We hear a lot about market share in automotive, gaining market share, losing market share. Let's understand one thing. Cleveland-Cliffs has so much more capacity to produce the steels that the automotive industry needs in comparison with any other supplier or any other wannabe supplier of automotive steel, that it's not even a topic of conversation talking about market share, about these type of things. We have 5 plants, full plants, that are ready to supply a lot more exposed parts than we are supplying right now. Not because we lost market share, but because the car manufacturers were producing cars in places like Mexico, Canada, South Korea, and I'm talking about American car companies, even in Japan, American car companies. So that's the absurd of the entire thing, and that's what's being corrected. So as they are being compelled, in the lack of a better term, to produce cars in North America, in certain cases like Stellantis, they are coming to senses and coming back to the reality that North America is their main market and Cliffs is their main supplier. We are seeing the business coming back and coming back extremely stronger. Just to give one set of numbers for you to think. Columbus Coatings, it's one galvanizing line ready for extra wide exposed parts that produce today something between 280,000 and 300,000 tons a year. The line itself is able, as is, to produce 450,000 tons, just by putting more throughput through the line, and that is coming. And the site itself is perfect to double in terms of the capacity in that specific site because we have room to put another line side by side with the existing one to double from 450,000 to 900,000 tons. That's on a single site. And we don't need to invest to put the new line because we have idle capacity in Dearborn. The downstream Dearborn is the most modern galvanized steel plant in the world. It was built in 2013 by Severstal and acquired by AK Steel, and then we acquired AK Steel. So Dearborn is ready for more. Middletown, same thing. Rockport needs to be visited. It's all robotic, it's all automated, has been like that for at least another 1 or 1.5 decades. So it's there. And New Carlisle, that used to be called IN Tech, IN Coat by Inland and Nippon Steel long ago, is pretty modern and pretty well equipped to produce not only hot dip galvanized and galvanneal, but also electro-galvanized, as well as Middletown. So we have, and that's just exposed. If you go to non-exposed, high-end non-exposed, you have Cleveland. Cleveland Works is the most technologically advanced mill to produce high-strength low alloys for the structure of cars here in the United States, and we have been doing that, but we have capacity for more. So that's prevalent everywhere. Indiana Harbor, Burns Harbor, our joint venture with Worthington Steel, Spartan, same thing. So that's 9 plants ready to grow as is or adding capacity as needed in the next 3, 4, 5, 6 years. So this movement that was initiated by President Trump that will percolate for the next 5, maybe 10 years will be all supported by Cleveland-Cliffs. And I'm explaining to you the capacity. So I'm not going to go into these little details on how much more the contract or this and that. These things are coming now as a wave of a new business that we are ready to take right now. Sorry for the long answer, but it was a good question. I decided to use it to explain details that probably are not well understood, but I hope after I made that explanation, we'll at least generate more questions that will keep us helping clarify the subject.
Oh, great. Thanks for the additional information. And then talking about the other opportunity that just came up for Cliffs on the rare earth space, are there any details or early details that you have in terms of the type of mineralization, rare earth mineralization that you may have, and what type of minerals potentially you could be producing? And also, is there a timetable for a feasibility or pre-feasibility study or preliminary economic analysis assessment? Sorry.
Look, I don't think that I want to talk about yttrium, dysprosium, or terbium, or cerium, or lanthanum, or neodymium, or praseodymium in this call. But I am a chemistry person, so I would love to, but I don't think that would be a good thing for us today, Carlos. Let's take this offline and let's discuss. The important thing is that they are there. We found them there. And we want to make it viable. We really believe that we have potential there, and that will be good for Michigan, for the Upper Peninsula primarily, and there's even one site in Minnesota that we would go. Minnesota is not very friendly to us, but we still investigate there. But we definitely will start in Michigan, in the Upper Peninsula, because we love the Upper Peninsula.
All right. Thank you, Lorenzo. Looking forward for that conversation on more details when available.
Yes, sir. Thank you.
Thank you. Our next question is coming from Mike Harris of Goldman Sachs. Please go ahead.
Okay, let's try this again. Hopefully you can hear me this time.
Very well, Mike.
Hey, how you guys doing? Hey, just wanted to follow up on the electrical steel award that you highlighted. And just to kind of help us, how should we think about that? Is that more of a kind of a one-time opportunity, or is this like the first of CDEX?
It's a one-time opportunity, Mike, but it's a multi-year one-time opportunity. The U.S. government, the Department of War, made the decision to put in storage a safety reserve, strategic inventory of this type of materials that we produce. So we are going to build that inventory together with the Department of War. And we are very proud of this partnership. It's extremely good in terms in economic terms and in the long-term viability. Of course, we're going to prioritize that because it's national security, and it will take years to finish. And this probably is this first move into a direction that it's clear that the Trump administration is taking in terms of protecting the country with strategic inventories of things that could be under attack in a moment that's not very peaceful in the world. So it's all good, and we are proud of our partnership with the U.S. government, and particularly with this specific deal.
Okay, that helps. And then just a follow-up to it, and I think, Celso, just a few minutes ago, someone asked a question around the cost reduction effort, and you kind of pointed out the track record. And I guess I was just curious, what we're witnessing here, is that just you guys now having the opportunity to take out maybe stranded costs from the acquisitions, or are we seeing the benefits from, some process improvement or technological advances? Just kind of help me understand what we're witnessing with the cost reduction effort here.
Yeah, sure, Mike. Thanks for the question. Yeah, I think, over time, we've been proactive in terms of optimizing the footprint. We became a steel company in 2020, if you remember. We acquired AK Steel. We closed that deal March 13th of 2020 in the middle of the pandemic. And then we doubled down and we acquired the ArcelorMittal USA assets in the same year, closed in December 9th of that year. And for the subsequent years thereafter, we became a major steel company sort of overnight, and it took time to optimize the footprint. It came with a lot of assets. Many of them were very good. Some of them weren't so great. So over the last few years, we've been prioritizing, optimizing the operations across all of our assets. And that's what's really driven the accomplishment on the cost side. And this year was really the completion of those efforts.
Okay, that helps out. Thanks a lot, guys, and good luck and continued success.
Thank you, Mike. Appreciate it.
Thank you. That brings us to the end of today's question and answer session. I'd like to thank everyone for their participation today. You may disconnect your lines and log off at this time. Enjoy the rest of your day.